Welcome to the NWR Near Term Producers Conference. My name is Kerry Stevenson. Up next, we have WA Kaolin. ASX code is WAK. Joining me today is Andrew Sorensen. He's the CEO. Now, these guys have got a massive a project over in WA. It's the wholly owned Wickerpin Kaolin project, and it's south about 200 miles or kilometres, I should say, southeast of Perth. So great region, great jurisdiction. Andrew, thanks for joining us at the conference. Looking forward to hearing the news. Over to you.
Karen. Thank you very much. I'm very happy to be here reporting on our progress towards production. And I'm just going to take you through this presentation today. That image you can see there on the opening slide is one of our pits that we opened up in about 2006, and we're currently mining as we speak. As Kerry mentioned, the location, we're about 220 k's southeast of Perth. You can see the pointer there at Wickerpin. We've got a very large resource. There's a 30.5 million tonnes of ore reserve, and that's contained within a total ore mineral resource of 640 million tonnes. And Kaolin is a very simple mining operation. It's open cut, low strip ratio, no drilling and blasting, and we have between 2 and 9 metres of overburden covering the ore body, which varies in thickness between 15 and 35 metres. For those who don't know too much about Kaolin, I've just got a brief introduction about the product itself. The product that we produce is used primarily in the ceramics industry. It's used in tableware, bathroomware, tiles, that kind of thing. And the ceramics industry have a very high quality threshold. You must have very low impurities for the fired product to be very white, which is very important. Excuse me. Kaolin is also used in the fiberglass industry, and we have a number of very high quality fiberglass customers, both in Japan and China, currently taking the product, and we have offtakes from those industries as well. And Kaolin's also used in paper and packaging. It's a paper coating. It's what imparts the printability and the shine and gloss into high quality papers. And for those of you out there who are familiar with HPA, HPA is high purity alumina. Kaolin is a feedstock for the HPA process, and our resource is very high purity, so it's absolutely suitable for HPA. But our company policy is to pursue the traditional Kaolin market first, and then see what happens with the HPA market. If there's a successful entrant into that market, then we're ready to follow on. Just another snapshot of the market dynamics in terms of size and location. As you can see in the graph on the left, paper and packaging is the biggest user of Kaolin globally, followed by ceramics, paint and coatings, fiberglass, plastics, rubber, pharmaceuticals, cosmetics, and others. And we have current sales into all of those markets, which is part of how we've achieved success in driving market development with our pilot plant in Kwinana. And looking at the right-hand side, you can see that the Asia Pacific market is the biggest market in the globe, and also the fastest growing. You know, the latest news in the Kaolin market is all about prices, and the prices are being driven by container shipping prices. And I've just shown a couple of graphs there on the right-hand side showing what's happened to the cost of shipping containers around the globe, you know, over the last 2 years. Obviously, that's reflected in the Kaolin price because we sell on a FOB basis, and then the customer pays the freight. So it's a huge increase in cost for the customers, but the customers are still requiring the product. So, and the growth of the demand in terms of volume is still growing at 3.5%. But what it means for us is that this container freight cost is going up around the globe, but we're coming off a situation whereby the cost to ship a container, say from the US to China, has increased a lot more than the cost of sending a container from Australia to China. So that's driving a bit of price interest in our products, simply because of the lower logistics cost to get it out of Australia as compared to the US or Europe. So
But just to be clear, Andrew, you don't have, like, it wouldn't matter what the cost of the freight is, because it does not impact your bottom line, because it's actually taken on by the customer, not by you guys. So if freight prices go up, no impact to your profitability, your bottom line.
that's right. So majority of what we sell is FOB. We do have some CIF contracts, but those CIF contracts are negotiated on a month-to-month basis and are linked to the freight costs. So we quote the customers back to back with what the shipping lines quote to us in terms of freight. So yes, zero exposure to freight prices for our business.
Thanks.
Those who know the company have probably seen this slide before, but I just wanted to emphasise the size and the significance of our resource here in Australia. Imerys, who is the second company listed on that table, are the #1 kaolin company in the world and have a 16% share of the global market. When you add up all of their reserves and resources of kaolin, you can see that they come up to about 250 million tonnes in their inventory across the globe in every operation. When you add our reserves and resources together, we have more than that. So it just really to give you an idea of scale and significance of our resource. Here's a picture of me standing in front of a stockpile of kaolin. Please excuse the cheesy look on my face. But we have been operating this business for some time, and before we did the IPO in 2020, we'd invest $42 million of our own money into the business, and we've since spent about $15.4 million in the staged ramp-up construction of the plant out at Wickerpin. We've got a small-scale plant that operates in Kwinana, and that Kwinana plant is enabling us to do all the market development and reaching all of these customers and securing the customer offtakes. And the offtakes we have in hand, when you combine them with LOIs, covers 88% of our targeted production out of the first stage. And we have offtake negotiations ongoing with other customers, and we're expecting to have the plant sold out and aggregate demand driving us to the next stage of production in the very near term. I've got some photos of the operation. The photo on the left-hand side is a drone shot of the shed that we've built. That shed's 150 metres long by 100 metres wide, and the lower roof area is 8 metres high, and the taller roof areas to the back and to the left are 18 metres high. And then the shot on the right shows the process equipment within the tall section of the building on the left there. You can see a feeder and a conveyor going up into a crusher, and then you can't quite see the kiln behind that, and then it goes into air separation, bag houses and storage in the silos at the very back of the building. We've 99% completed the construction as we sit here today. Basically, every major piece of equipment is installed. The electrics are all wired up. We're just currently going through dry commissioning of spinning up motors and testing field devices, and the detail work of installing chutes, ducts, and all of that kind of stuff that connects all the plant up. So we're very near completion, and that's been a great result by the team out at Wickerpin. We've had some headwinds with COVID and the restrictions on delivery of stuff from overseas, and we've managed to negotiate all of that, and sort of, I guess the headline is on time, on budget, which is a great result for the team. Just sort of detailing out, you can see the gen sets there on the right hand side connected up with the fuel cell. That is a detailed shot of the kiln at the bottom there. All of that's in place. The gen sets have been tested and are ready to power the site. The LNG vaporizers and gas metering has all been connected up to the plant line, and we've negotiated that 15-year LNG supply agreement with Clean Energy Fuels Australia, as well as a 15-year water supply agreement. Just a couple more photos. That pit is the pit that was on the opening slide. That's just a detailed view.
Wow.
And And I think it's an interesting picture because it shows the overburden thickness as compared to the quality of the resource. We're down to about 17 metres there. In this particular location, the resource is 35 metres thick. So we're about halfway into the resource where we are. And as we grow the pit laterally, we'll go deeper into the resource.
Great photo.
Thank you, Kerry. Just talking about the stage one, this is the plant that we're almost ready to fire up. It's going to happen in this next quarter, as in quarter two. It will run at 25 tonnes an hour, producing 200,000 tonnes of kaolin a year, employ quite a lot of staff. And as I mentioned before, we've got LOIs and offtakes for the majority of the output. We're expecting to have pull from the market for us to enable to press the go button on the stage two, which is essentially a cookie cutter of stage one. So we're duplicating stage one to double the output of the plant to 400,000 tonnes per annum. And we're expecting that to probably come on stream in 2024. And then we'll continue to grow our capacity in line with the market demand going forward from there. So as I said, on time, on budget, and installation will be complete within weeks as we speak. We'll then move into the commissioning program. The commissioning program will take us through till sometime in June when we'll be into production. We've brought forward some of the spending on CapEx on stage two because it made sense for us to both in terms of implementation time and cost. We can put things like the electrics in for stage two, the gas, certain elements of the buildings that were designed around stage two. A lot of infrastructure we've installed for stage two simply because we can see from the market situation that we're experiencing that we will be wanting to progress to that stage two duplication much faster than we originally considered. So for those of you who've studied our DFS, you'll note that we expected to spend about $14 million on stage two production. We're now expecting that will cost around $16 million just through the inflationary pressures we've seen over the last few years. But don't forget that we've spent $4 million up front as part of the stage one program to implement those aspects of the infrastructure for stage two. So we'll be able to bring the stage two on when we decide to pull the trigger on that in 12 months and around $12 million. So here's the stage one program. We're right over here on the right-hand side now. So we can see that we're into the commissioning phase and we'll be up and running by June. And I just wanted to kind of look at the anticipated program for stage two because we're talking a fair bit about that. So you can see that through 2022 there, we've started to put the stage two infrastructure in, which is that pink bar. And you can see that we'll, within June of this year, we'll start production of stage one. And then the full-on construction of stage two will commence sometime in 2023. And we're looking to have commissioning and production of stage two sometime in 2024. And this is on the back of the very strong demand we have from customers. Our advantage, I think, is the amount of time that we've been in the market, developing the market with the kaolin produced at our Kwinana pilot plant. And on the back of that, we've attained a lot of offtakes in various geographies and market verticals. So we're in China, Taiwan, Japan, Vietnam, Australia, of course, and we're in the verticals of fiberglass, ceramics, paint and coatings, building products, and cosmetics. So all the key geographies and key market verticals we already have ongoing sales out of our pilot plant, and this really does give us a great springboard to build out that offtake volume for the next two stages. So in conclusion, we're very proud of the fact that we'll be delivering stage 1 on time, on budget, and it'll be up and running in the June quarter. In this current quarter, sorry, in the quarter ending June 2022. We've got very great confidence that that plant, that when we press the go button, will operate to design, because we've been operating a smaller scale version of it at Kwinana for the last 5 years. And in terms of the size of the scale up between our pilot plant and where we're going to, it's not a big scale up. So very low risk in that. The marketing activities that we've put behind getting our offtakes in place for stage 1 have actually yielded more demand. We can perceive there will be more demand than we can meet with stage 1. So it's going to allow us to accelerate the implementation of stage 2 going forward. And I just think that the balance of stage 2 required cash flow, which turns WA Kaolin will accelerate the stage 2 to make customer demand. So we'll be able to fund this stage 2 out of those funds, and will not be coming back to the market. Let's have a look at the corporate overview. We currently have 1,400 shareholders, and of those, about 71% are in the top 30, and the board holds 30%. We've got a market cap of $63 million, and we have unlisted options and performance rights out there. So that brings us to the end of the presentation, and Kerry, I'd love to field any questions.
Thank you, Andrew. A very substantial one. Could you go back, I think it's about 4 slides, to where it was a picture of the shed?
Yes.
And lots of greenery around that one. Thank you very much. So curious just to know the sort of the area that you're in. Are there any environmental issues, any farmland around you, any challenges with the way you're going to build this, and also getting into stage 2?
Yes, well, I thank you for bringing this picture back up, because you can see that we've got 2 pits, and this picture shows those 2 pits in relation to where the shed is. So at the very top of the picture in the centre is the original pit that was dug by Rio Tinto, and which we've been working since 2000. And then the other pit, which I've shown you the detailed photos of, is over there on the top right-hand side. We opened that one in 2006, and materials from both of those pits get transported to the plant for processing. In terms of our location, we're completely surrounded by farmlands. The company, related entities of the company, owns the land on which one of the pits is, and the processing plant. So from that point of view, it's a tightly held real estate. And we have very good relations with our neighbouring farmers. We obviously are very keen to stay on good terms with them, and they're very supportive of the project. We've had no negative feedback from any of our local neighbours, and the local council, and basically all the stakeholders who live near us are very supportive of the project. So in short, there is no environmental concerns. We're a long way away from the nearest forest and state forest. We're also well above the water table. So the short answer is that there are very little concerns around the environmental impacts.
Okay, so I guess my question was, when you look at the original pit, which is Rio Tinto, which you're now still going with, and the more recent pit, and where the plant is, I'm just curious as to why you position it there, because it would seem to me, I could be wrong, but it would seem to me, wouldn't it have been better to put it directly between the two, less time to get, I don't know, why that area?
Oh, well, it's all to do with future mining plants. So those pits are all going to progress towards the plant over time. So if we were to move the plant and put it on top of a Kaolin reserve, we'd be,
that's all reserve.
Yeah, so there would be products there we couldn't access. So
okay, got it. So that all that I see out there, that's all going to be, that's the expansion area.
Yes. So the pits will expand sort of within that picture towards where the building is.
Got it. Okay, that makes a lot of sense. All right, I've got a question here. What are your medium to long-term objectives post-delivery of stage 2?
Well, we're looking to add further stages in response to market demand. So we've built the building in mind so that we can expand the production areas to the left of that picture. So we could continue to add those 25-ton modules, and we can expand the warehouse, which you can see, which is on the right-hand side. That can expand towards us. So the location of the building and how the building is designed is all designed around continuing to grow the size of the operation in those 25 tonne per hour or 200,000 tonne per annum modules as we go forward. We've also got the opportunity to branch into other kaolin products. As I mentioned, HPA. We can move into the HPA space once that technology is proven. And we can also move into more higher refined process kaolins in the future. And the pilot plant we have here at Kwinana will be relieved of its duties of producing kaolin for the customers once this starts up. And it's going to be repurposed into an R&D centre for those future technologies of the highly refined kaolins.
Well, speaking of HPA, because you mentioned that that's the future application for kaolin feedstock for HPA. So if you've got a sort of a timeline for when that demand will be a factor, and why do you think WA Kaolin are well placed to be a supplier in that regard?
Well, we've been a participant in the kaolin market since 2000. So the founders bought the tenements from Rio Tinto in 2000 and have been present in the market for those 22 years. So we know a little bit about kaolin, and we've watched the HPA story with interest over that whole journey. Our view is that the HPA market is a very attractive market because of the selling prices. And our resource is very pure. So in terms of a feedstock for the HPA market, we're ideally placed in terms of feedstock. So it's really just proving out the market and proving out the process. And once we've got confidence that those pieces of the picture are together, then we'll launch into our own area in that space if in fact that does occur.
Andrew, final question from me, which is, you talked about 42 million had been put into the project before you listed in 2020. I kind of want to look at the, I guess, the numbers, if you like. So from an investor's point of view, why now is a good time to invest? Because there's already been a lot of money put into it, so there'll be a payback period of time. What do you think is a reason for people to be looking at it? What are the numbers around this? Why is it a good investment?
Look, I think the size of the resource means that we've got hundreds of years of mine life, so that sets us apart from a lot of the other projects around. The other thing is our focus on paying dividends. I'll be quite frank that this business doesn't require a lot of capital, and it's a very stable market which has a very stable growth over time, both in history and looking forward. So it's a machine that's going to make money, enable us to pay dividends over the long period of time, and that's what really excites us as the founders, and what I think investors will see as being a very valuable asset going forward.
All right, I'm going to ask one more. Like, we are running out of time, so this is the very last one, ladies. Oh, stop giving me questions. How does your project differ from the other kaolin projects like Andromeda in South Australia and Suvo Strategic?
Well, I think Andromeda, are a good company, and they've also got halloysite in their resource. So, I think we don't really compare apples to apples with Andromeda, because we don't have halloysite, and a lot of their business plans are around the halloysite products. In terms of Suvo, I just think we have a bigger resource, a higher quality resource, and probably a bit further along on the production front than they are here in WA, because I do know they have an operation in Victoria, but in WA we're a lot further along than they are.
All right. Well, we've got to leave it there. But David King did turn around and say, are you going to put some solar panels on all those lovely big roofs that you've got there?
Well, the short answer is yes, and we need about 2 hectares of solar, so they won't go on the roof, they'll go on the ground, and we'll probably do that sometime in 2023.
There you go. Andrew Sorensen, WA Kaolin, absolutely delightful to chat to you today. All the best for the future.
Thanks, Kerry.